Deven sir, good afternoon. Mansi this side, and the first half and the second half of the market looks quite different. Good positivity coming in, but yes, we also need to consider that there are a lot of global uncertainties which are weighing in, a lot of contingencies, and in between, the Indian markets are digesting it all very maturely. What's your take on the market texture, sir?
Yes, good afternoon, Mansi. Well, I think during the expiry days, the volatility in the market is pretty well known. Generally, we have seen the shift from Thursday to Wednesday and Wednesday to Tuesday when the expiry day of the month happens, when maximum amount of volatility, maximum amount of ups and downs in the market would take place. We would like to think that this volatility would probably subside as we progress into the new month, new contract, as the rollover takes place. And we believe that I think the overall environment in which the corporate sectors are currently announcing the results, it is resulting into significant amount of shift of position from one counter to another counter or one sector to another sector. And that's where I think you're seeing a distinct amount of volatility also at the same time in the market. Uh, Maybe this market is also giving opportunity during the price corrections in some of the stocks which are at times sharp. So select fundamental companies are definitely looking appealing to us, I think, from 3 to 4 years perspective, of course, but I think in the near term, next 3 to 4 quarters as well. Largely, the fact is that this year has started with a promise. In this year, we are taking into account the lower input cost, lower interest cost, and on the other side, recovery in the consumption, recovery in the business environment, B2B as well as B2C level, which is resulting into higher growth prospect for the current year. So we remain distinctly confident about 25-26 financial year, progressing well in subsequent quarters, both on margin front as well as on the revenue and the growth front.
Okay, Mr. Choksey, we'll come back to you in just a bit, especially because you said that you see a lot of opportunities across several sectors. We'll ask about that. But in the meanwhile, Asian Paints just reported its numbers. It was largely in line as far as revenue figure is concerned. Margins contracted on a year-on-year basis, and profit and revenue remain flat. But remember, management commentary continues to remain very positive, because of which the stock witnessed a sharp uptick after it reported its numbers. Rabinder is now joining us to do all the number crunching for us. Rabinder, tell us what stood out in the numbers this time.
Well, as Asian Paint has announced their Q1 number, and overall company's number was in line with the street estimate. Company reported revenue at rupees 8,939 crore, which was flat on year-on-year basis. And if we talk about PAT, then company reported a PAT at rupees 1,099 crore, which was down by 6% year-on-year basis. And if we talk about on the margin front, and the company's reported a margin at 18.2% versus street was estimating a margin at 18%. So margin was also flat. And if we talk about other segment of the Asian Paints, then category saw degrowth in Q1 FY25 with the pressure on the household disposable income, and the decorative business saw decorative business register a volume growth of 3.9%. If we talk about international business of companies, then the international business register a value growth of 8.4% on the back of the Asian market, UAE and Egypt, and the revenue from the industrial coatings grew by 8.8% on the back of their good performance in auto and the protective segment. And all the key markets in the Middle East and the South Asia performed well. If we talk about commentary from the management, then the CEO said that the paint industry has experienced a slight uptick in the this quarter despite the despite monsoon, and they are confident in long-term potential of home decor and paint industry. So overall, inline set of number of Asian Paints and a positive commentary coming in from the Asian Paint.
Inline set of numbers, it reported Q1 with profit below estimates and flat revenue front. However, the management is quite confident about the forward-looking approaches and the business structure for the company. Coming back to you, Deven sir, as we clearly see, long-term investing is a rewarding experience, and one should always understand the importance of long-term investing. Having said so, there are many investment ideas which you come across with. Are there any sector-specific approaches which you would want to share with us? And yes, of course, for Jio Financial Services, I now see a lot many brokerages and experts talking large about the reasons why one should get in Jio Financial Services. But I also remember you categorically talking about the company.
Yes, I think our approach has been to buy a company or a business when probably I think it is starting to grow, that is in a nascent stage, and then allow this business to grow and mature, and then probably monetize the investment out of it. That's been our approach. So no wonder I think we find I think such kind of companies when they are not looked at seriously. Like for example, Geofinance, which you mentioned, we saw this model emerging between the credit, that is NBFC model, the model pertaining to AMC, the insurance model, and the wealth and the distribution model. Each of these four verticals we clearly saw emerging out of the company. And we also put across, I think, all the unit metrics about how exactly the business can be unfolded. Probably, I think that has just started beginning now. I wouldn't be surprised if AMC business of Geo takes over most of the other AMCs. I think in a due course of time in next 3 to 5 years, because the kind of size on a mass market product that they can create could be unbelievable. Could be I think scaled up very well. So similar such kind of approach one can find in various other businesses, be it in the BFSI space, be it in the manufacturing space, be it in the area of pharma, where contract research and manufacturing and API space, or for that matter, companies which are engaged in a B2B solution providing capacity in the engineering and R&D space. So we do find the similar kind of, I think, propositions for growth in some of these particular areas which we look at. In fact, power utilities and manufacturing sector connected to it, IT sector connected to it, is a brilliant opportunity for next 10 years. Should one find, I think, good companies into the portfolio, this is a good time to probably look at this sector very holistically.
Coming back to you, a few more sectors and in particular auto and auto ancillary space. As we see the global connect is impacting a few sectors, let's say auto sector, and at the same time if you see the pharma, healthcare and diagnostic space also. The tariff implication and what will happen with the India-US negotiation is something which we all are waiting for. But how do you see these sectors performing in lines of these developments and announcements?
So I think more importantly, suppose if the FTA has been signed with UK, and if this is going to get through, then probably it's a 1 year process, because after the UK Parliament clears it, I think it will get implemented. And should thereafter, I think it gets implemented as decided, then in such situation, I think India is opening up, or their UK is opening up for India a big time, I think, opportunity for exporting a lot of engineering products, including the automobile and automobile ancillary products as well. And UK could be, I think, a gateway to other parts of the Europe, or for that matter, even to US also, given the kind of tariff complexity that is being talked about. However, what my point out here would be that it is giving sufficient amount of time to the industry at one end to basically configure the entire selling arrangement with those countries and the companies therein. And more importantly, I think that the governance term of President Trump would come to little closure if I think this particular tariff mechanism is taking time for implementation. So in my viewpoint, I think this is going to be a very complex situation for the industry as a whole to plan everything in advance. In my viewpoint, we remain positive about the Indian companies and their prospects, largely because of the fact that we are probably, I think, registering a case, becoming one of the most cost competitive manufacturers of various items in the world. And at the same time, I think those countries which want to export into India, even at a 0% duty, I think India has a substitute products which are far better in quality as well as in scale, I think, compared to them. So I'm not completely ignoring that, but I think I'm not too much worried about, I think, this entire mechanism. Maybe case by case, we look at the businesses and see how exactly they grow from the current levels.
Okay, so that's the view coming in on several of these auto and auto ancillary sectors. But Mr. Choksey, also wanted your thoughts on the entire banking and financial services sector, especially because of the kind of numbers that it has reported. Kotak Mahindra Bank, after reporting its numbers, was down 6% the next day. IndusInd Bank was also not a very great set. Banking and financial services was a consensus buy a couple of quarters ago, especially given the valuations they trade at. Now, at this juncture, after the numbers that they've reported, what will your view be on the entire sector?
So we remain distinctly bullish about the possibility because the prospects are emerging brighter going forward. On one side, your liability side in the balance sheet is basically giving you comfort because the cost of fund is coming down. And on the other side, because of the sheer growth in the economy, both in MSME, SME segment as well as in the retail segment, wherein the credit offtake is on a higher side, I think that gives a good amount of clarity as far as the banking growth is concerned. In fact, I think that we believe that the banking area could possibly grow 1.5 times the nominal GDP growth, that is about 15 to 16% of the GDP, about 15 to 16% kind of a growth, which is about 50% and above kind of a growth over GDP. We believe that I think the differentiator here would be those companies which are having the ability to reach out to the end customer very fast by use of systematic implementation of fintech platform. And I'm referring to retail credits in particular, and I'm also referring to SME, MSME credits, which is processed at a faster speed. So to a greater extent, I think some of the large NBFCs, some of the large corporate banks which are having a significant amount of integration with fintech, they could be the winners in this entire game as we see it. And if the normal growth is 15-16% in credit, some of these companies would end up growing at 20-22 or 23-24% in as far as credit lending is concerned. So I think we have to look out for the winners within this entire pack. And that's where I think it's going to be fun going forward from investment perspective.
Deven sir, before we let you go, a golden piece of advice for our market viewers is what we expect from you, because it's a very tricky market at present. Looking at the news and development, one thing is for sure that market, both global as well as domestic, is in a flux-like situation. The FI's comeback is expected, where we don't see it. The earnings season is still a mixed bag, and at the same time a lot of global uncertainties. What is the advice coming for the market participants who are drawing their portfolios and trying to create their portfolios at present?
In this volatility, Mansi, I see great opportunity for buying some of the value stocks when they are available at a lower price. And that's the one thing which we believe is going to play out well. This volatility is not going to subside. The negative news inflows or the headwinds are not going to subside because there are plenty in the universe. But the fact is that I think with the price, some of the opportunities are going to become very, very rewarding opportunities going forward. And those investors who are planning at least 3 years from now, they are likely to be winners in this entire game. In my viewpoint, I think this entire decade, 2025 to 2035, should be a very rewarding decade for the investors in general. And that is where probably I think one needs to be selective in buying the investment opportunities.
All right, so you need to be selective. That's the word coming in. Mr. Choksey, thank you so much for taking your time out and joining us here on ET Now and helping us with a whole host of investment ideas for the next few years. But Shiva